All right, good afternoon. Welcome back to this channel on the next presentation. Like I said earlier last week and the previous videos, I said I'll be coming here to analyze the market and give out my own bias on any pair I'm going to analyze, which is mostly two pairs. So last week I looked at Euro USD and gold, and I said no, Euro USD and BTC, sorry, and I said I won't be trading last week. I looked at GBP JPY. I said I'll be trading because for us, like for someone like me and others who are into swing trading and not just day trading, we always want to look for a better confirmation to enter the markets. We don't enter the markets if the market is ranging like throughout last week. If we could see what was going on in the market, Donald Trump was making some tariff laws and um, taxations and what have you not, and it was just spiking the market, especially those trading the USD based pairs and quote currencies. You could understand that currencies like GBP JPY, GBP USD, Euro USD, AD USD, New Z USD, the pair was very much, there was a lot of spikes on it. You woke up this morning like card, GBP card, USD card, you woke up and you see something like a spike up to the downside or to the upside. So for someone like me, I chose to just stay clear of the market for last week, so I didn't trade. As from Monday to yesterday being Friday, I said I'm going to be continuing my trading on this week that we're entering, which is on the 11th. Yeah, so today is 18th February 2025. I'm here to share my screen once again on two pairs, which are gold and USDJPY. This is throughout last week, it performed my entry. These two pairs performed my entry criteria for the bullish and the bearish movement. Although I've already said I'm not going to be trading the market last week, so I don't normally break my rules. My hands were tied. I just watched them print my entries and show me some sign of trend continuation and what have you not. So I left them last week, and this week, entering this week, this is when I want to be trading. So if you stick to this to the end of this presentation, you will see my bias and why I think these pairs will make this move that they are out to make from next week. Do well to stick to the end of the video. You know what to do: like, comment, share, and most importantly subscribe to the channel. And as we all do that, with time we'll grow to a large number where every of my journey, my losses, my gains, and what have you not will be shared on this particular channel. So do well to like, comment, and share, and subscribe. And if you feel anything, you want us to talk about, any question, do well to put on a comment section. Or if you have a bias on a particular pair that has been analyzed on this channel, do well to ask a question, raise an observation. This is where we learn, because trading is a dynamic environment. The markets change every day. In fact, it's ever changing every second. So my analysis today might be obsolete tomorrow, likewise the next day. So nothing is set on stone in this environment. Do well to always comment on your opinion, and let's grow. I would like to move us now to the place where I'm going to be analyzing these pairs and share my bias and why I think price will do what they ought to do. Stick to it, and see you on my next screen. Thank you. Alright, welcome back to this screen where I want to be sharing my analysis on gold and USDJPY. So here we're on gold. Like I said, my overall bias on gold has been bullish, as we can see from the monthly time frame. This is a monthly time frame, and price has very much broken above this resistance. It has tested it with some daily candle close on the daily time frame. Now, before someone will ask, how am I sure it's a bullish move? Like, as you can see, you don't need a soothsayer to tell you that gold is very much bullish, because anytime gold breaks out of its resistance, it makes a very massive bullish movement to the upside, just like it did here when it consolidated here for over 3 years. That's from 2020 to 23. Then it broke out on 24, and it has been on a very long bullish movement throughout 24. It got here, it did as if it wanted to make a kind of range. It's stalled for a little bit, and it broke out again, and it's trying to test the $3,000 per ounce on gold. And we all know gold always tests rounded numbers whenever it breaks out of like here it's started from $1,000 per ounce, goes to 2,000, and it goes to $2,000 per ounce. Now it's trying to get to the $3,000 per ounce price on gold. Why is gold doing this? Because gold is an asset value. This is where countries store their assets. Is how do they call it now? Is countries back up their currencies with gold, with oil, with silver, or with diamond. Just like in Africa, like countries like Nigeria, the currency is backed up with oil. Likewise, other currencies, likewise Canada. So gold, some currencies are backed up with gold, some world currencies they are backed up with gold. That's why you see gold always going up in prices, and you see the currencies depreciating, and the value, the storing value is always appreciating, just like gold. If we go to the weekly time frame, as we can see, there is a weekly candle close above this level, telling me that gold is very much bullish, and it has broken above this resistance. Like I said before, it's trying to get to this $3,000 per ounce price, and when it gets here, it's likely coming to 4,000, and just like that, it keeps going up. Just like the S&P, gold always goes up, and it's very easy to trade if you understand the trend and how gold movements is always forming. So, like I said, on the daily time frame, as we can see, this is a 4 daily candle close above that resistance. I don't always count on the candle that broke out of the resistance, because most times it will look like a spike. However, there is a full bullish daily candle close above that resistance. Again, we had extra 3 daily candle close above that resistance. However, for me to trade this pair, how do I enter this trade? How do I continue this bullish move? Because you just can't enter the pair. You can't just start trading it because you saw price has broken out, or it's now looking like it's pointing towards the upside. Because if you're trading like that, you are very much gambling, and most times you'll be getting stopped out. Now, this very much tells me why I should enter this trend and why I should not. What I do is I pick my entries on the 4-hour time frame. The daily I use to know where the market is going. Obviously, on gold is very much bullish. Or on the 4-hour time frame is where I want to pick these entries. I want to make sure I'm entering at the best prices. Like if I go to the 4-hour time frame, what I see is here. Now this is the price has been making high, low, high, low, high, and it's stuck above this trend line. Like we all know, trend line, the third touch of the trend line makes it magic. It's the one that moves the markets up. But however, this is on a 4-hour chart, so we can't bank on any trend line on a 4-hour chart because it can be broken at any time. The 4-hour charts, it's more temporary compared to the daily and the weekly. Like I said, now this is what I want to be doing. I want to form a base around this level. I want to form a base. I want to create a minor support level, and a minor resistance. So my entry will very much be in between these levels. If you ask why I'm doing this, it's because I want to see what price does here. Remember, this is the 4-hour chart, and I don't want to be taking premature trades. I want to see price confirming to me that okay, it's time to start buying or it's time to wait. Like if I should bring my Fibonacci, which I always use, at least it helps it gives me a nice entry at least 70% of the time, to make sure I'm not taking premature trades. Like if I should draw my Fibonacci from swing low to swing high, like here previously, this is the 0.50 fib level. If I should move it further to where it is at the moment, as we can see, this support is very much resting at the 0.50 fib level on the temporary support, which is a trend line. And this is this confirms to me where this is a confluence zone, where entries where you can be sure you're entering at the very best price, because once price breaks this trend line, comes to this level, right, this is where I want to be entering this market. And when I enter here, I want to place my stop loss below this resistance. My stop loss, I want it to come just below this resistance. So if someone asks me, why do you want your support level to come below this resistance, is because as you can see, gold is very much bullish, and however, if my stop loss is below this resistance, automatically anything that makes gold to start trading below this resistance, which would definitely tell us that all these levels are all fake outs, which means gold is very much coming back to this range, which is practically impossible. What gold could do is just to come here, pick some buy orders, and move to the upside. Now this is my first entry. What will my second entry look like? My second entry will be just this trend line. My second entry will be just above this trend line. This will be where my second entry will be. Remember, if I use my Fibonacci from here to here, this on this trend line is also a confluent level. However, on the 4-hour time frame, this is also a confluent, but I won't be buying here. I want to make sure I see a kind of bounce and see a 4-hour candle close above this trend, above this line, above this price. Then I will enter, I will place a buy order, I'll make a buy order and place my stop loss just below this former entry level, with my overall target being here. And once price makes a kind of 100% retracements, I always take partials along the way. I'm not those traders that don't take partials. I like to make sure I take partials along the way. Once price makes a full 100% retracement, I take partials. I take at least 70% of my positions, I close it out and allow the rest run risk free. However, I don't close trades. What do I mean is I allow I don't use take profit levels, I only use stop loss levels. I allow the trends, I allow my market, I allow the trend to keep going. I like to take it along the way. So when price gets to this level, if I should see a daily candle close or 2 daily candle close above this level, I will add some positions again until it starts moving. So this is my analysis on gold. Like I said, I'm very much bullish on gold. I want to see what price does from Monday and Tuesday. Then I will start buying gold from that day, which is from Monday or Tuesday. Very much is going to tell me what is going to happen inside this range. However, this range will tell me whether to buy from this level or to buy from this level. But overall, when I buy from here, my stop loss will be below this resistance, and when I'm buying from here, my stop loss is going to be here, because my overall target is very, very big and large. I will always risk daily candle to make 4, 10, 11 daily candles ahead. So this is my analysis on gold. Let's go to USDJPY. USDJPY, this pair, I'm very much bearish on this pair, but I will explain why that. If I should go back to the monthly chart, alright, from the monthly charts, what I can see here is there is a trend line which signifies that this pair is bullish from the monthly perspective. However, the monthly chart has also told us that this pair is making a pullback, a reversal pullback, not to counter the trend, but this is a pullback to pick some buy orders. And I had a minor support below this level, which played out last week. But because I've already said I'm not going to be trading last week, because I had some losses last week, I just got off. Whenever I'm on a losing streak, I just stay out of the trend to observe what the market is doing, and because of that, that was why I couldn't stake on this pair last week, although it made my entry confirmation, because throughout last week the market was very much, there was a kind of noise on the market. If you're trading currencies like Euro, USD, GBP, USD, you see that or USD card, there are mostly spikes on those pairs last week, because of these tariff laws that Trump was imposing on Mexico and Canada, and you could wake up one day and you see a spike. So because of those things, I just stayed clear of the market to very much see from the larger time frame what the market, the overall trend, what is trying to tell me. And as we can see on USDJPY, is very much telling me that the market is bearish. As we can see, it is making a bearish move to this trend line support, or to this level, and this level is a very significant level. This 148 spots 525 level, because analysts have been saying on these levels, they have been predicting that price is likely going to drop to this level, because I use the investment.com, I use the Forex Factory, I listen to most analysts from JP Morgan Chase, People's Bank of China, the analysts, what they see, their forecasts, because these are people that actually have the liquidity to move the market. As retail traders, what we have to do is just to follow them and see what they're saying. Like I said, I'm very much bearish on USDJPY. Now let's go to my weekly chart. This is where I map out my entries, my key levels. I mean, like as we can see here, this is a very strong resistance and this is a very strong support, and we have also a trend line support which is likely going to move this market to the upside. However, I also have this, I always have a minor support level and a minor resistance level. This minor support level, I drew it on daily time frame to tell me that whenever I see a 4-hour candle close below it, which signifies that buyers sellers are in the market and the pair is going down. And this analysis, I made it last week. However, because of how the market's environment was last week, I said I won't be trading it. I just left it to start up next week. So from next week, I'm very much bearish on USDJPY, and mere looking at this, not that I'm going to trade this pair. You ask, how do I enter this market? My entries are always on the 4-hour chart. If I should go to the daily time frame, what is the market telling me? Like as we can see here from the daily time frame, we have 3 daily candle close below this my minor support level. This was the one that broke below it, and we have others that follows. Again, I will always come to make a kind of range in between those levels so that I don't take premature trades. Now, if I should go to my 4-hour chart, my overall target, if I go bearish, is this target, this level here. This green line is my overall target, is my first target, and my second target will be this trend line support. However, before I trade this pair, I'm going to risk a little, because it's actually a little move. On the 4-hour chart, what I see is, as we can see, immediately price broke out of this level with a 4-hour candle close. This is the support level I was talking about. With a 4-hour candle close, it started making lower highs, lower low, lower high, lower low, lower highs and low. However, because of last week the market close, it hasn't made a lower low yet, so anything can happen here. We could see something like this. This is why I always want to make sure I continue my analysis where the market stops during the previous trading sections, during the previous weeks. Now that the market has done something like this, now I won't be delusional to start entering here. I want to make sure I see something like maybe this. I want to see a 4-hour candle close below this level, then I will enter this trade to target this level with my stop loss here. My stop loss will be here, just resting at this price. to target here. And once I see when market gets here, however, I won't just leave the trade open to market gets here. If I get to this level, the 100% retracement, I take partials. And once market gets here, I see 4-hour candle close below this level, I will add another position to the massive trend line support. However, I won't just enter this trend because I see price moving that way. Remember, this is a downtrend that is making lower highs and lower lows, because it broke out of this support. Because this is very much telling me, although we're on a 4-hour chart, this is printing like a double bottom formation on a 4-hour chart. This is why I won't be trading this pair until I see that confirmation the illustration I'd made before. Because most times you can start selling from, let's say you sell, you make market opens and you sell from here. When you sell here and you target here, your target is, let's say you start selling here and your target is here, and let's say your TP is here. This is your TP and this is your entry and your target is here. You could see something like this. The market can be tricky because it's dynamic. You could see something like the market gets here, does something like this, takes you out, then starts trading back again, and you'll be like, what's going on? That's because you failed to understand that this lower high, lower low movements didn't continue because the market closed. So I want to see a continuation of this lower low, a 4-hour candle close below here, then I can confidently enter this trade and say, okay, the bearish move has continued. But until then, I would very much leave it till Monday. I want to see a 4-hour candle close below this level, below the 151 spots 000 level, price level. Then I will start trading below those levels. I will start my bearish movement from there. So this is very much my analysis on these two pairs. I'm very much bullish on gold come next week, and very much bearish on USDJPY on next week. However, I won't be trading this pair if I don't see my confirmations that I've illustrated on this analysis. And do well to always like, comment, and subscribe and share to your friends and invite people to this new channel. And I'll be waiting for you on the other page. Remember, every week we always have to analyze two pairs, and I always come to share my entries and how it's all playing out. And cheers, and I like to urge us all to always follow and subscribe. Thank you, and see you on the other screen. All right, thank you. I appreciate you staying to the end of this presentation, and I hope you learned one or two things based on my analysis on gold and USDJPY. If you have any intake, any bias, or anything you feel is left out, do well to drop it on the comment section. And you know what to do. As always, like, comment, and subscribe, and invite others to this new channel. This is a new trading channel that is coming up. With time, will grow to a large number. The thousands and the million. It takes time and consistency. I pray, and I hope I'm going to keep up to it. Again, like I said, my analysis is going to be based on just analyzing two pairs every weekend, maybe Saturday or Sunday, but I'll make sure I keep to that. I want to do this so that after my trading throughout the week, I'll come and drop my observations and what's happened in the markets and how it's played out. If there was a loss or profit, I'll do well to say it. Remember, I'm a swing trader. I don't day trade. I don't scalp. Scalping and day trading is more for, those that are more advanced, and those that have the time to stick to the screen for hours. I don't really have that time. I'm more into swing because I understand the market feels others, so I follow the swing. I place my trade and I leave it and do some other things I have to do on my own self. Thank you, and catch you on the next presentation. Good luck.